Hello friends, we are on day 8 of our quick revision batch. Today we will discuss chapter 10 related to joint product, byproduct, costing. In this chapter we will revise the difference between joint product, byproduct and co-product. Then we'll discuss the accounting of byproducts and then we'll discuss the accounting of joint products. This is what we are going to cover today. Let's go. Joint product byproduct costing. First of all, this method of costing is used in an industry where multiple products emerge out of a common process. Multiple products will emerge out of a common process. So the manufacturing process is common. Please remember, joint product byproduct costing topic is linked with process costing. In process costing, we have seen the records are kept process wise. So let us say there is one process in which the raw material is getting processed, but the output is not one. Outputs are more than one. Means when there are multiple outputs emerging out of a common process, then these multiple outputs which emerge from a common process are either called as joint products or byproducts. So these multiple products are either known as joint products or byproducts. Example, if you remember, in sugar factory we had discussed in the regular batch, in the first process, crushing process, when you crush the sugar cane, you get a sugar cane juice which goes further in the next process for converting into sugar. But after the sugar cane juice is extracted, some leftover is there. Basically that leftover is also a product, because it is called bagasse. It is called bagasse and it is sold to paper industry, or it can be burned and can be used as a fuel and you can generate power using that. Similarly, in the second process, that is boiling and cleaning process of sugar, where the sugarcane juice is boiled and cleaned with the help of chemicals. In this process also we get the cleaned juice which goes further for manufacture of sugar, and the impurities which are removed in this process is known as molasses. It's a product, and this molasses is sold to distilleries, and through distillation process in distilleries you can convert it into alcohol and various alcohol based products. So these multiple products are emerging from a common process. These products are either known as joint products or byproducts. Other example we can take of oil refinery. I am talking about crude oil which is taken from the oil well. Crude oil, petroleum oil, which is taken out of the oil well. That oil goes into the refining process. And in the process of refining, you get multiple products, multiple petroleum products like your diesel, petrol, kerosene, naphtha, you get aviation turbine fuel, you get that white petroleum jelly and variety of products. Some names you and me know, there are more technical names. So variety of products emerge from an oil refinery. The input is same, that is crude oil, and the refining is a process, but in that process you get variety of products. Some of them are called joint products, some of them are called byproducts. We'll see the difference now. The difference between joint product and byproduct. The products whose economic value means market value. If the economic value of a product is higher, then such products are known as joint products. And those products whose economic value, that is market value, is lower are known as byproducts. So suppose in one common process there are 4 products emerging. In one common process, while processing, you get output as 4 different products, A, B, C, D. Out of which you think that A, B and C have got good market. They fetch a good value in the market. So you may call A, B and C as joint products. And D fetches a very low value. Then D can be called as byproduct. Like in sugar factory, when I said, in the first crushing process, bagasse is produced. Now bagasse won't get that much value which sugar gets. So bagasse is a byproduct of crushing process. Similarly, in second process, boiling and cleaning, you get molasses. That molasses also cannot be called as a joint product because it will fetch very low value. but still that is a product, it is valuable. So we will call molasses also as byproduct of a sugar factory. So these are byproducts whose economic value is lower, and if economic value is higher, you will call it as joint products. These joint products can also be called as major products or your main products, right, which you intentionally want to manufacture, right? Like we call the sugar factory as sugar factory. We don't call it as a factory for processing or producing molasses or factory for producing bagasse, because bagasse and molasses gets inadvertently produced in the process of manufacture of sugar. So they are not main product. The main product is only sugar. So similarly, the joint products are called as major products or main products, and the byproducts are called minor products. They are subsidiary products which gets produced automatically, not intentionally, in the process of manufacturing. Now it is the judgment of management to treat some of the products as joint products and some of the products as byproducts. So that is your judgment. You have to judge the economic value of the product, and you may treat any of them as joint product and any of them as byproduct. It doesn't make much of the difference. So it is management's judgment. Now let us see the difference between joint product and co-product. In the first reading, it sounds that joint product and co-product would be same, but it is not so. There is a difference between joint product and co-product. Joint products are those which arise from a common process. Please remember, arise from a common process. And co-products are those which do not arise from common process, but they are produced in the same factory using the same manufacturing facility. Means co-products are those which are produced under the same roof, using same manufacturing facilities, using same workers probably, but they don't arise out of a common process. Process is not same, right? The processing might be slightly different, but machineries could be same, manpower could be same. So these are called co-products then. Like in a car manufacturing unit, you manufacture variety of models of cars, right? Variety of models of cars. Now it's not that raw material goes and you get model A, model B, model C out of the process. No. If you are manufacturing model A of the car, only model A will get manufactured. Then you can start manufacturing model B of the car on the same unit, in the same factory. So I have given some examples. Various models of cars are manufactured in the same factory using same machinery, but they are not joint products. These various car models are co-products. Then various brands of soaps. If you have got a soap manufacturing factory, you can just change the input and a different type of soap will get manufactured using the same processing unit. But the variety of soaps doesn't get manufactured in one process, that raw material is going common and you get variety A, variety B, variety C all. No. The facility is same, machinery is same, but input will be different and you have to manufacture different variety of soaps. So different variety of soaps or different models of cars, these are examples of what? Co-products. They are not joint products, please remember. In this chapter, we are talking about joint products as well as byproducts. Now some important terms which are used in this chapter. One is a joint cost. This is a very common term, all of you are aware. Joint cost is the cost up to split off point. Means after a particular point the product will split, means variety of products will emerge. But before these products emerge or split, whatever cost is incurred up to that point, that cost is called joint cost because it is commonly incurred for multiple products. You can also call it as cost up to separation point, where the products get separated. Up to that point, whatever cost is incurred, that cost will be material, labor and overheads. So this cost will be called as joint cost. Can also be called as common cost. All means one and the same. Joint cost, cost up to split off point, cost up to separation point and common cost. All means one and the same. Further processing cost. Name itself suggests that is cost incurred after split off point. Now it may happen that once the product is splitted from a common process, you need to process it individually further to make it fit for market. It may happen that you need to process that joint product or byproduct further after getting split off so that it can be sold in the market. So if you incur individually the cost, separate cost on that product for further processing, then that is called further processing cost, or cost incurred after split off point, or cost incurred after separation point, or just a separate cost. Please remember, it is not a common cost, it is a separate cost. In this entire chapter, we don't have to discuss much about separate cost, because if separate cost which is individually identifiable with a particular product, then that cost will be entirely charged to that product. Actually, this chapter is more meant for this cost, common cost. If there is a common cost and in this cost we have produced 3 products ABC, then the problem is how to share this common cost between the 3 products, because it was common. And that whole logical distribution of common cost between variety of joint products and byproducts is your topic itself, that is joint product byproduct costing. One more concept we'll discuss, that is net realizable value. See, either your joint product or byproduct, whenever it will get sold, it will realize some sale value, that is called final sale value. So that joint product or byproduct will realize some sale value. From that sale value, if you deduct this further processing cost as well as your marketing expenses to make it fit for sales, whatever it is. So whatever cost is individually incurred on that product, if that individual cost including selling expenses, if they are deducted from its final sale value, what you will get is net realizable value. Suppose in that sugar factory the bagasse is sold for rupees 10,000. Bagasse is sold for rupees 10,000. But before you sell this for 10,000, you have spent rupees 2,000 specifically to make those bagasse into bundles, which is called bales. You have to make it bales by compressing it through a machine. Expenses you have incurred on marketing of that product. Then 10,000 minus this 2,000 and 1,000, that is minus 3,000. This 7,000 will become net realizable value. 10,000 is final sale value, 2,000 is further processing cost, and 1,000 you can say is marketing expenses. So net realizable value is 7,000. These are some terms which we will be using. Now we will first discuss accounting of byproducts. First we will discuss byproduct accounting, and then we will discuss joint product accounting. Please remember, the word used is accounting, but don't take it that hard. Basically here accounting means how to allocate common cost between joint products and byproducts, that's all. But in technical language it is called accounting of byproducts. First I am assuming some joint cost. Material 50,000, labor 30,000, overheads 20,000. That is how total joint cost is 1 lakh. This is common cost, please remember. Common cost incurred in the process. It means you will debit this cost to the process account debit side. You can assume this as process account debit side, material, labor, overheads. So total cost is 1 lakh, which is common now. And from this process, 3 products have emerged. Let us say product A, product B, and product C. Process is common. So this is, you can say, debit side of the process account. And there are 3 products you will write on credit side of the process account. Right? 3 products on credit side. Now you have to assign this 1 lakh value to product A, B, and C. And that is what the topic is. That is itself called accounting. Out of which management would like to treat product A and product B as joint products, because they may realize higher economic value. And management wants to treat product C as a byproduct because it may not fetch great value. So at present we are discussing this accounting of byproduct, that is product C. It means our main area of discussion or focus area of discussion is that out of this common cost 1 lakh, how much should be treated as a fair share of the cost of product C. This accounting of byproduct means what? In this example, we have to decide out of that 1 lakh joint cost or common cost, what is the fair share of cost of manufacture of product C, that is byproduct C. That is called accounting. So let's discuss one by one methods of accounting of byproducts. One method is called other income method. This is one method suggested by institute, other income method. In this method, you have to credit the sale value of that byproduct to costing P&L account. Right? Now, see when this method is to be used. When sales revenue generated by the byproduct is too small, then this method is used. So exactly what is done? Let us assume that this byproduct can be sold for rupees 800. Just for example's sake, the byproduct can be sold for rupees 800. So some people feel that if this product can be sold for just rupees 800, it is a very small amount of income or revenue. So don't do any special accounting. This 800 rupees you should credit to costing profit and loss account as other income or miscellaneous income. It means nothing is to be credited to process account, but this sale value is directly credited to costing P&L. So nothing will be credited to process account. So what will happen? Please remember, this is your debit side of process account, this is credit side of process account, and this sale value of byproduct is credited not to process account but is credited to costing P&L account. In this case, this 1 lakh cost, nothing will be shared by C, it will be shared only by A and B, and the revenue generated by C will go as miscellaneous income to costing P&L. This is one suggestion, but it is not a very good suggestion. Reason: it's not a matching concept. See, cost is incurred and debited here, so why not credit should also be given here itself? It means in the process account itself. If the debit amount is here, and out of this 1 lakh cost you have generated that product C, so revenue should be credited to process account only instead of crediting it to costing P&L account. So that will be the next method. But this is one method which is suggested by institute, so I have to discuss. It is called other income method, where no special accounting has to be done. Only the revenue generated by byproduct has to be credited to costing P&L account. So this is a better one. That is credit of sale value to joint cost. See, example will remain the same. I will keep changing the method. Credit of sale value to joint cost. Here is the joint cost which is debited to process account. You will give the credit here itself to joint cost. It means in the same process account. So suppose once again this byproduct is sold for rupees 800. So the credit will be given in the process account itself. So process account debit side 1 lakh, process account credit side 800. If you remember yesterday's discussion, in process account we used to credit the realizable value of normal scrap, and that value was deducted from debit side. It's exactly the same manner. It means this sale value of product C is credited here in the process account 800. So 1 lakh minus 800. Now the amount left is 99,200. This 99,200 will be shared between two joint products, that is A and B. Got it? So it's written here, if the sale value of byproduct is a little sizable, not very small, then it is advisable to give credit of such a sale value to the common cost. Common cost means joint cost. And the remaining joint cost then should be apportioned between the joint products. This is a better method than the previous one, provided the sale value is little sizable. If it is very small, then you can directly credit to costing P&L. Next, credit of net sale value, that is net realizable value, to joint cost only. Whenever I say credit to joint cost, means credit to process account, where you have debited this joint cost. Where you have debited, credit it in the same account. Now see what is written. If byproduct requires further processing after the split off point, it means the byproduct is not readily sellable at split off. It requires some processing after split off. Then this method is preferable. Under this method, net realizable value of byproduct is calculated and then it is deducted from joint cost. Deducting from joint cost and crediting to joint cost means one and the same. The remaining joint cost is then should be apportioned between joint products. So we'll take an example. This byproduct C, let us say, it is sold for 1,500 rupees, which is final sale value of this byproduct. But before you can sell this for 1,500, you had to spend further processing cost, especially on product C. Further processing cost incurred on this product was 500. This is further processing cost after split off. It means to generate a revenue of 1,500, you have to spend a cost or money of rupees 500. Adjust this cost against this revenue first. So deduct this cost from the revenue generated by this product. Now net revenue is 1000. This net revenue 1000 is called NRV. Now this revenue you will credit here to process account. Crediting to process account means as good as deducting it from this 1 lakh. So 1 lakh debit, 1000 credit. Now net debit left is 99,000. This 99,000 will be shared between joint products A and B. That is this method, which is called credit of net sale value to joint cost. You imagine these two sides as process account debit side, I am repetitively saying, and process account credit side. And debit and credit should match. So debit is 1 lakh. And credit of process C, credit side process C, I am writing only 1000, which is net realizable value. And remaining 99,000 will be shared between A and B. How to share it between A and B? That is what we are going to study next. That is accounting of joint products. At present, I am discussing only accounting of byproducts. And that is in our example, byproduct is only C. Next, opportunity cost method. Check this opportunity cost method. If the byproducts are used for captive consumption means consumption by yourself, is called captive consumption. Means something which you produce and you yourself consume, that is called captive consumption. Then appropriate credit is to be given to joint cost on the basis of opportunity cost. Now let's take an example that this byproduct which we are generating, product C, suppose this byproduct is molasses generated in sugar factory. Now instead of selling this byproduct C to outsiders, your sugar factory has thought that we ourselves will do the distillation, because molasses has to pass through distillation process to convert it into alcohol. So you have set up your own distillation plant, and now you are not selling byproduct C to anyone, that is you are not selling molasses to anyone, but you are giving it to your own distillery, which will do the distillation of this product, and then the final product will be sold. Now as you are not selling product C, you will not get any sales revenue, and your distillery, your own distillery, will get the input free of cost. Now this is not a correct accounting. So what we will be doing is, we will assume that if product C is sold in the market, how much money we would have got. If we sell product C in the market, byproduct, then how much money we will get. So suppose the market survey says that you would have got around 1000 rupees from the market if you sell. But as you are not selling it but giving it to your own distillery, so you are losing an opportunity to earn 1000 rupees from the market. This opportunity lost 1000 rupees will be treated as opportunity cost. It means the cost of product C will be treated as 1000 rupees. So out of 1 lakh, we will treat the cost of product C as 1000 rupees as an opportunity cost. Now what entry will happen now? Suppose this, what is on your screen, what you are seeing on the screen is sugar process account. And there is another process called distillation process, where product C will become input. So what you do, distillation process account debit 1000 to this sugar process account 1000. Means to this process you give credit 1000 and you give debit to distillation process where this product will be used 1000. And now remaining 99,000 will be distributed between these two joint products. Means you will as good as assume that you have realized 1000. Right? That is the opportunity loss. That is opportunity loss to sell that byproduct in the outside market. Then standard cost method. This is another method. Here predetermined cost by the management. Here the cost is already determined by the management, predetermined based on their past experience. For example, suppose we assume that this product C, which is a byproduct, we have manufactured 1000 units of byproducts, and management has already fixed its cost using their own calculation, which we call as standard cost. They have decided that we will treat the cost per unit of byproduct as 1.5 rupees, 1.50 rupees per unit is the cost, standard cost of byproduct. So for 1000 units it will become 1500. It means out of 1 lakh rupees you will treat the cost of byproduct as 1500. Now then the remaining cost is now Remaining cost left is 98,500. This will be shared between A and B. This method will never be asked in the exam because standard cost has to be given in the question, and it is the same cost which is applicable to byproduct C as decided by the management. Now we go to the accounting of joint products. Right? Byproduct accounting is done. Now we have to distribute the common cost between variety of joint products. Let's discuss various methods. One is the apportionment on the basis of physical measurement, that is on the basis of output. Physical measurement and output is one and the same. That is the first method of apportionment of joint cost between joint products. In such case, the joint cost is apportioned in the ratio of quantity produced. You apportion the joint cost in the ratio of quantity produced. This method can be used when all the products have uniform sales price. This method is considered good if you have the uniform sales price. It means if your joint products are A, B and C, or in our example it is A and B, then A's sales price and B's sales price is same. Then you can use this method of physical output. So the sales price of various products differ largely. If the sales price of the various products differed largely, then this method should be avoided. Then this method should not be used. But if the sales prices are uniform, then you may use this method. We will discuss the reason also that why it should not be used if the sales prices are different. Now this method is also called as average unit cost method. Institute has given a new name to this, output method or physical measurement method. The same method is called by one more name, average unit cost method. Average unit cost method. My dear friends, from where this word has come, I'll tell you. Suppose this 1 lakh is a joint cost, and there are two joint products A and B, and the quantity produced is 10,000 and 5,000. In that case, we will distribute this 1 lakh rupees in the ratio of 10:5. 10:5 means in the ratio of 2:1. That is called physical output method. Now what institute has done, they have used one more name, average unit cost method. And what they do, they will divide this 1 lakh rupees by the total of the quantity, 15,000. 1 lakh will be divided by 15,000 units, and you will get average cost per unit. That is this, average cost per unit. And average cost per unit into 10,000 units and into 5,000 units will be the share of cost of product A and product B. My dear friends, I think even if I tell you to distribute 1 lakh rupees in the ratio 10:5, the same thing will happen. But then same thing they have explained through a different way, that 1 lakh divided by this 15,000, you will get first average cost per unit and then multiply by 10,000 and 5,000 units. So according to me, these are not two separate methods. This physical measurement or output method and average unit cost method is one and the same. But in institute's literature, you will find as two methods. Now let's assume that there are only two joint products A and B, and we have to distribute joint cost 1 lakh. If the output of A and B is 2,000 units and 3,000 units respectively, then the joint cost shall be distributed in the ratio 2:3. Now we'll go to relative cost method, relative sale value method. It is the most popular and logical method of apportionment of joint cost. Which one? Relative sale value. It is just sale value method only. Why I am using the relative word? Because if there are two products, you will compare the sale value of A with sale value of B. So when we do the comparison, it is called relative, right? So basically, we will apportion the joint cost of A and B in the ratio of sale value of A and B. In the ratio of sale value. So in the ratio of sale value is a relative sale value of A and B. Now earlier we discussed that it should be apportioned in the ratio of quantity, that is output. Now we are saying it should be apportioned in the ratio of sale value. It is very popular and very logical method as compared to the previous one. Now how the sale value of a product is calculated? Sale value is the selling price. Please remember, when we use the word selling price, it is selling price per unit. So selling price per unit into that output quantity, you will get the sale value of that product, the value at which that product can be sold, selling price into output. Now let's see the logic why sale value method is the most preferred method, means a better method than output or quantity method. So we'll take this example. I'm assuming output quantity of product A as 2000 units and B as 3000 units. I'm assuming only two joint products, that is A and B. And sales price per unit I'm assuming 50 and 10. This is the sales price I'm assuming. Now you'll notice sales price is largely different for product A and B. Now output into sales price. Now if you multiply this by this, you will get sale value. You will get the sale value as 1 lakh rupees and 30,000 rupees. This is sale value or relative sale value. Now friends, if I apportion my joint cost of 1 lakh in the ratio of this quantity, then it will get apportioned in the ratio of 2:3, correct? And if I apportion the same cost in the ratio of sale value, that is this, then this 1 lakh rupees will get apportioned or distributed in the ratio 10:3. Now you will notice there will be a huge difference in the apportionment of cost, right? If I apportion it in the ratio of output, it will be apportioned in the ratio of 2:3. And if I apportion it in the ratio of sale value, it will get apportioned in the ratio of 10:3. Now, in this first method, don't you think higher burden of cost will go to product B? These are products A and B. Higher burden of cost will go to product B as compared to the second method, that is sale value method. Product B will bear lower burden of cost in sale value method. And that's correct. Now in first method, that is output method, as you are giving higher share of cost to product B because the quantity of product B is higher. As the quantity produced of product B is higher, therefore you are giving higher share. However, product B generates a very low revenue. As it is generating very low revenue, its revenue generating capacity is lower, but you are loading more burden of cost on that product. So that product will unfortunately report a loss because you have loaded more burden of cost than the ability of that product to bear the burden. But in second method, that is sale value method, the apportionment will be logical. A product which generates higher revenue can bear higher burden of cost. So product A is generating higher revenue, that is 1 lakh, as compared to product B only 30,000. So the cost will be distributed in the ratio of revenue. So more the revenue, more will be the burden of cost, because cost is adjusted against revenue only. And therefore sale value method is considered to be more logical as compared to the output method. But output method could have been good if the sales price is uniform. Suppose if sales price of this product is also 10 rupees per unit and here also 10 rupees per unit, then you will get sale value as 20,000 and this sale value will remain 30,000. Now you will see the sale value ratio is also 2:3 and your quantity ratio is also 2:3. So it doesn't make any difference provided the sales price is uniform. So if sales price is uniform, then you can go on the basis of quantity. But if sales price is not uniform and substantially different, then better you should apply sale value method. Therefore sale value is more logical. Now we are again going into sale value method. In sale value there are three different variations. What are these? One is final sale value method. Second is net realizable value method at split off point. And third is actual sale value at separation point, that is actual sale value at split off point. Now in which situation we should use this method, in which situation we should use this method, and in which situation we should use this method. We will see that one by one. It's predominantly it is sale value method, but small variation is there in the use of sale value method. Let's go one by one. So let's understand this method through an example only. So I am on second method, apportionment on the basis of final sale value now. Final sale value method. If we calculate the final sale values of all the products from the given information, if we can calculate the final sale values of all the products from the given information, then we should prefer this method of allocation of joint cost. It is definitely superior to the first method, that is physical output method, which I have already explained to you. Now it's very simple. Let us say output, I am again taking 2000, 3000 units, that is total 5000. I am taking final selling price. Final selling price means ultimate selling price at which A and B will get sold. 80 rupees per unit and 20 rupees per unit I am assuming. Now, output into selling price. Okay, one more thing. We never take the total of selling price. Selling price total is illogical. We can take the total of sale value. Now final sale value, that is A into B, quantity into selling price, is 1,60,000. 60,000. 1,60,000 plus 60,000 is 2,20,000. It is the final sale value. Now we will distribute the joint cost in the ratio of this 16:6. So I am assuming joint cost, I am assuming total joint cost as 1 lakh, and this 1 lakh we will now distribute in the ratio 16:6. If you are sitting with the calculator, you can also do it, right? 1 lakh you can divide or split in the ratio 16:6 or 160:60, whatever you say. Amount will remain same. So you are right. Share of A, product A, is around 72,727. Share of product B is around 27,273. If you have done it on your calculator, you can cross check immediately if you want to. So this is our final sale value method. Very, very simple. Actually, this topic is simple. This topic is nothing but how to distribute common cost between those common products, that is joint products and byproducts. That's all. You have to do it on some logical basis. You can apply the similar logic. You have applied the similar logic in overheads topic also. In overheads topic, if you remember, in apportionment of overheads, the common overheads we had distributed over different departments using some logical basis. Similarly, here the common processing cost we are distributing over the products on some logical basis. Now you go to the third method, that is apportionment on the basis of net realizable value at split off point. Net realizable value, NRV, at split off point. Now when this method is used, if the products are further processed before selling them, means you cannot sell the products immediately after split off, but you have to process it further, and further processing cost is available in the question. There are two conditions. First of all, product needs to be processed further, and what is that further processing cost is given in the question. Then we should prefer this method, that is third method, over second method. Second method was final sale value method. So instead of final sale value, we will prefer this method, that is net realizable value method, if this information is available in the question. So just check this. I have copied the previous data, that is final sale value. Up to this we had already done. But assume these products A and B require further processing, and that further processing cost is available. So further processing cost is given in the question. Let us assume as 30,000 and 10,000, that is total 40,000. Now final sale value minus further processing cost is your net realizable value, NRV, that is C minus D. So 1,30,000 and 50,000 is your net realizable value, total is 1,80,000. Now the joint cost will be distributed in this ratio, that is 130:50, or you can say 13:5. So I am assuming joint cost again 1 lakh, and this 1 lakh we will split in the ratio 13:5. And what is 13:5? Is the ratio of net realizable value. Therefore this method is known as net realizable value method. Do it if you are sitting with the calculator. Distribute 1 lakh rupees in the ratio 13:5. You will get it as 72,222 and 27,778. This is net realizable value method. Now let's go to another one. Fourth one, apportionment on the basis of actual sale value. But this sale value is at point of separation, that is at split off point. Actual sale value at split off point. Now when this method is to be used, if the products can be sold at split off point itself, means the products are sellable at split off point, they are not required to be processed further. So if the products can be sold at split off point and the information is available in question, information available in question is sufficient to calculate the sale value at split off point. Simply speaking, they have to give you the quantity at split off point, and they have to tell you the sales price at the split off point. If these two figures are available, quantity generated at split off point and selling price at split off point, then quantity into selling price, you will get sale value at split off point. If this data is available in the question, then we should prefer this method over even method number 3. Method number 3 was NRE. So we will prefer this method if this type of data is available. So let's take an example. That is actual sale value at separation point. Output I am assuming same, 2,000, 3,000. But I am now assuming sales price per unit at separation point or at split off point. This sales price is, let us assume, 50 and 10 at split off point. Now we'll get sale value at separation point or sale value at split off point, that is A into B, which is 1 lakh and 30,000, total is 1 lakh 30,000. And now the joint cost will be apportioned in this ratio, that is 10:3. So 1 lakh is the joint cost, apportion it in the ratio of sale value at separation point, that is in the ratio of 10:3 or 1 lakh is to 30,000, means one and the same. So distribute 1 lakh in the ratio of 10:3, that is 76,923 and 23,077. I hope I have done the calculations correctly. You can cross check using your calculator. So these were three variations of sale value method. Now first we discussed was the physical output method. As compared to physical output, the better one was final sale value method. As compared to final sale value, the better was NRV method, net realizable value, and as compared to net realizable value, the further better method is actual sale value at separation point. But it all depends upon the data available in the question. Now we'll discuss the remaining methods also, which are not very popular, but they are there in the syllabus. So let us discuss marginal cost and contribution method. Marginal cost and contribution method. If it is possible to split the joint cost into variable joint cost and fixed joint cost, then this method should be preferred. This variable joint cost itself is called as marginal cost. Marginal cost and variable cost means one and the same. So if your total joint cost can be divided in two parts, variable cost separate and fixed joint cost separate, then you should prefer this method, provided this type of data is available in the question. Now what you have to do? Under this method, as I said, joint cost is divided in two parts, variable cost and fixed cost was divided in two parts, and then the variable cost, that is variable joint cost, is allocated to the joint products on the basis of output. On the basis of output, that is physical quantity. And the logic is very simple. Variable cost depends upon number of units produced. So more the output, more will be the variable cost. That is the logic. So variable cost will be apportioned in the ratio of output, and then fixed joint cost will be apportioned in the ratio of contribution which is earned by each joint product. And how will get the contribution? Sale value of the joint products minus variable cost. You will get contribution, and in the ratio of contribution you will distribute the fixed cost. And the logic will be the product which generates higher contribution is capable of absorbing higher burden of fixed cost. Therefore, more the contribution, more should be the burden of fixed cost. Now let's see through an example again. So check the data. I am carrying the same data. Let us say output is 2000, 3000 units of A and B. Selling price is 80 and 20. So A into B I will get sale value. Now I will first of all split the joint cost in two parts, variable joint cost and fixed joint cost, which will be given to you in the question. First we will apportion variable joint cost and then we will apportion fixed joint cost. So variable joint cost is apportioned in the ratio of quantity produced. And what is the quantity produced? Quantity is produced in the ratio 2:3. So this variable cost will be apportioned in the ratio 2:3. Now I am assuming variable joint cost as 60,000. I am assuming variable joint cost as 60,000. This 60,000 will apportion in the ratio 2:3. So it will be 24,000 and 36,000. You can try in the ratio 2:3. Now from this sale value I will deduct this variable cost. So I will get contribution. So contribution is C minus D. That is sale value minus variable cost. So contribution is 1,36,000 and 24,000. Total contribution 1,60,000. Now I will apportion the fixed joint cost in the ratio of 136:24. In this ratio, that is in the ratio of contribution, we will apportion fixed joint cost. So fixed joint cost apportioned in the ratio of contribution. This cost will be apportioned in this ratio. I am assuming fixed joint cost as 40,000. If you remember, our total joint cost was 1 lakh. That is 1 lakh is these two together. But it is possible that 1 lakh can be split in two parts, 60,000 variable joint cost and 40,000 fixed joint cost. First we apportioned 60,000 variable joint cost. Now we are apportioning 40,000 fixed joint cost. But this joint cost is apportioned in the ratio of contribution, that is 136:24. So distribute this cost in the ratio 136:24 on your calculator, and you will get it as 34,000 and 6,000. So this is called marginal cost and contribution method. Only have to remember 2 points. Variable cost should be distributed in the ratio of output and fixed joint cost should be distributed in the ratio of contribution. Now there is one more method called technical evaluation or survey method. This method is never asked in the examination, but it is there in your study material. This is the method of last resort. Means this method should not be used in the beginning. It's a method of last resort. If sufficient information is not available in the question to apportion the joint cost, then this method is used. It means neither they have given you the quantity of output, nor they have given you the sales price or sale value, no further processing cost, nothing. And if no data is there and they are asking you to apportion the joint cost, how you will apportion? So in that case, this is the method of last resort. You will take the help of technical people, right? Or you will carry out the technical survey and then will apportion the cost. So under this method, the help of technical experts is taken and the joint cost is apportioned as per their suggestion or their judgment. Meaning, if I take the same example, 1 lakh is the joint cost and no information is available and we want to distribute it between A and B. So you will talk to the production manager. You will tell production manager that, see, we want to apportion this 1 lakh rupee joint cost between A and B. I don't have a data, what to do? So production manager says, okay, no problem. According to my judgment, we take 60% efforts to produce A and 40% efforts to produce B. So very simple. What you do? Charge 60% cost to product A and charge 40% cost to product B. That is 60,000 and 40,000. But this efforts taken 60%, 40%, who told you? The technical expert. So it is his judgment or his suggestion, and on the basis of that suggestion you can apportion this cost. Friends, that's all is about the accounting of joint product byproduct costing. So we'll stop here for the day. See you tomorrow for the remaining chapters. Okay friends, bye bye.